Something really interesting is happening in the financial markets right now, and it's a story you'll want to hear. It seems the smart money we read talking about the big institutional investors and hedge funds might be quietly making a move out of stocks. Size, what's going on, and what could it mean for the rest of us? Let's break it down. Think of the market like a giant chessboard. The best players, these large investors, are constantly repositioning their pieces. They're moving vast sums of money between different types of assets. One day they might be heavily invested in stocks. The next, they could be shifting into bonds, commodities like gold, or even just holding on to cash. These moves aren't random. They're strategic. Each decision they make sends a signal about what they expect to happen next in the economy. It's like they're trying to see around the corner, and watching where their money goes can give us a clue about the road ahead. Lately, we've been seeing a clear trend. A significant number of these major funds have been reducing their stock holdings and increasing their positions in bonds and other cash-like assets, such as money market funds. So, the big question is, why? The one-word answer is uncertainty. The market is facing a lot of headwinds. Right now, think inflation, interest rate hikes, and geopolitical tensions. When the waters get choppy, professional investors don't want to get tossed around. They'd rather move their ship to a calmer harbor, and right now, that harbor looks a lot like bonds and cash. This phenomenon has a name. It's called a flight to safety. When big investors start to worry about potential volatility or a downturn in the stock market, they prioritize protecting their capital over chasing high returns. They move their money from riskier assets like stocks to safer, more stable ones. We've seen this pattern play out time and time again before major market shifts. It's a classic defensive play. They are essentially buying an insurance policy against potential turbulence. Now, does this automatically mean a stock market crash is just around the corner? Not necessarily. It's important to remember that these investors are managing risk, not predicting the future with 100% accuracy. A flight to safety could simply mean they expect a period of slower growth or a bumpy ride for a while, not a full-blown crisis. It might be preparing for a correction rather than a collapse. But what it absolutely does mean is that the people with the most money on the line are getting cautious. They're buckling up. And that's the key takeaway here. When the smart money starts preparing for turbulence, it's usually worth paying attention. It doesn't mean you should panic and sell all your stocks, but it is a powerful reminder to review your own portfolio. Understand your risk tolerance, and make sure your financial plan is solid. Keeping an eye on these big picture trends can help you make more informed decisions for your own financial journey. Thanks for watching. If you found this helpful, be sure to like this video and subscribe for more insights into the markets.